Profit booking at record levels. The Nifty crosses 25,100 for the first time, posts a record close to end higher for the 10th straight day for the first time in 4 years. The broader markets, though, underperform the blue chips in today's session.
IT stocks outperformed. The index gains 2%. L&T Technology Services says conversations and the pipeline have vastly improved, even as it sets a $2 billion medium-term revenue goal. A recovery in BFSI tech spending in the US also prompts a bullish view on LTI Mindtree.
NBCC rallies 10% after it says that the board will mull a bonus issue on August 31st. GMM Pfaudler gains 5% after 9.2% equity changes hands worth around 557 crore rupees. And Trent surges as Bernstein bets big on the stock.
Hello and welcome to this special presentation. Indeed, it was a bull charge, a slightly smaller one, but one that did take the market to a fresh all-time high. Consolidation for the last 2 days, and it was day 3, third time lucky for the bulls. I'm Surabhi Upadhyay. With me, as usual, on the show is Nigel D'Souza. Hi, Nigel.
Well, hello and welcome to our special edition. Bull charge ahead. There's plenty to talk about in the next 20-25 minutes or so. But what a day it's been on Dalal Street. Over the next 20 minutes or so, we'll decode all the market action, the key developments. We'll get you all the top market opinion, corporate voices, and track the cues for the day as well. But Surabhi, let me first do a quick rewind of how the day went. We said it this morning that there's possibly, a chance that the Nifty goes ahead and hits those fresh all-time highs. That's what I said earlier this morning. And in the first 1 hour, we were down 50 points. But in the following hour, that's within 2 hours of opening, well, the markets went ahead and made those fresh all-time highs. There were stocks that did quite well as well in today's trading session. But it was more a stock-specific day by the end of it. So we hit all-time highs, slipped from the top. The tech index did very, very well. And a few stocks that did well in today's trading session were the larger cap names. You had Wipro, Infosys, they did well. Ahead of NVIDIA's numbers, tech was buzzing in trade. The Nifty Bank, though, it underperformed. Remember, it has the element of expiry as well that did play out. But the advanced decline ratio, Surabhi, that tells you the picture, right? You'll be wondering, these guys are talking about fresh all-time highs, but my portfolio is not feeling too good. That's the reason. More number of stocks declining than advancing by the time we wound up.
Well, absolutely. Well, the wise men have been calling for a move from small cap, mid caps to large caps for a long time. We don't know if, indeed that's starting, because yesterday was a day where the large caps did have a much better session than the mid caps. There you go. That's the mid cap index ending at the lows. And of course, IT, the buzz we will discuss in more detail. The IT index was absolutely sizzling. IT and pharma, actually, 2 pockets, but IT was the one that held on to a bulk of those gains. Remember, there's a lot of excitement around NVIDIA's numbers, which come out later in US market action. And if the NASDAQ uptrade continues, and usually that has a bit of a rub-off effect, though it's chalk and cheese, very different businesses, Indian IT companies and those listed in the US. But in general, the positive tech sentiment tends to rub off on Indian stocks as well. And perhaps there was some of that already playing out. We'll discuss this as we go along. But first up, the lineup today. Here's what we have in store for you. We'll start off with the top movers and shakers. We'll have Hormuz filling us in on all the action. The sector of the day, as we have been telling you ad nauseum, is really IT. So what lies ahead for the tech pack? Why was there so much of buzz? We will discuss all of that. Individual stock action, we'll be focusing on NBCC. The stock was hitting record levels today. We'll tell you why in just a bit. GMM Pfaudler rallied big time on the back of a very, very large block trade. More details coming up. And then Bernstein had a very positive view on a couple of retailing stocks, including Trent. And Trent really rallied 5% up today. So more on these stocks, coming up in just a bit. And then, of course, we get to our segment D Street Chatter, talk about all the buzz in dealing rooms as the Nifty hit a fresh all-time high today. And then, of course, some of the key conversations as well. But let's kick it off first with Hormuz, who's here with the movers and shakers. Hormuz, all-time high once again.
Indeed, all-time high. But we can't say the same for the broader markets, though. But there were enough and more movers within the broader market space that were in the green despite the very skewed advanced decline ratio. But we'll start off with, of course, the sector of the day, that was IT, and pick an IT name and it was up in today's session. LTI Mindtree up 6.5%, the top gainer on the Nifty today. Wipro, LTTS, Coforge, Persistent, all of them having a good day, and most of them ending at or near the highest point of the day. So that was some good going there. But brokerage commentary, there were a lot of stocks that moved on the back of brokerage commentary today, and Tata Elxsi was one of them that did not, was possibly the only IT stock that didn't do well in today's session. After the 17% rally that we saw yesterday, some bit of profit booking, ending at the lows of the day, 8.5% lower for Tata Elxsi. Trent, as if the stock has not moved up much enough, it's still another 5% today, but who are we to complain? Another positive brokerage note coming from Bernstein. MCX as well as Zydus and Amy Organics with the upgrade that it received from HDFC Securities earlier this morning, 6% higher there as well. Some other stocks that did well in today's session on the back of news flow, and NBCC was one of them, was up 16% at one point of time, ended 10% higher on the back of its bonus issue. Ahluwalia Contracts, JBM, DCX, Jyoti Structures, all of them won orders during the course of the day, ending with gains of anywhere between 2.5% to 5%. Stocks that did very well on the back of very strong volumes, and GMM Pfaudler had to be there on the back of that block deal that took place. HUDCO among the PSUs did well, as did Engineers India, and IEX had a good day on very strong volumes, 4% higher there as well. And some selling pressure barring Tata Elxsi was also seen in stocks like KFin Tech. The stock was up 13% yesterday, so some bit of cooling off today. Kaplan Point, after that one big move last week, has been coming off consistently, as is Nykaa, Just Dial, and Nuvama also did not have a very good day at the office. Back to you guys.
Okay, all right. Thanks a lot for that, Hormoz. Let's get in our guest for today's show. To help us out with the technicals, we have Rohit Srivastava, who's joining in, as well as Amit Jeswani, who's going to help us out with the fundamentals. Hi, gentlemen. Thanks a lot for joining in. Rohit, you go first. Some have been calling for a correction, some cooling off. That's not to be. At the start of August, people thought 24,000 has come. We told you so. Guess what? We're going to end August at 25,000. Where do we go from here?
My sense is we still have quite some room on the upside. I think whatever happened before the elections was a long consolidation phase, and we've sort of broken out of that, and that has set us up for a prolonged move to the upside. That's something that people are slowly but surely recognizing. And in terms of levels, so we should be heading, I think, towards 25,500 to 25,700 in the coming days. Those are the next set of levels where we will look for some resistance. But I don't think the move really ends there. I mean, it might just be the next hurdle where you may see some consolidation again. But I do think this is a multi-week, multi-month move. I mean, the only time period for some worry would be somewhere between late September into October, because that has to do a lot with the US election season, where you've typically seen volatility in the previous two election rounds. So those are the things that we will look at. But apart from that, I think overall the larger trend remains bullish, and that's the good news. It will remain a buy on dip market, except that you may see rotation. So you have to get used to the idea that there will be a lot of sector rotation, there will be stock rotation. You need to be in the right places. Even the talk you were doing earlier between mid cap and large cap, we'll have to move between those. Even in terms of the Nifty bank, say for example, bank Nifty is, I think, the big laggard out here. And it's not even done a 60% retracement of the previous fall, which is little surprising given that the Nifty is already back at the all-time high. It's very rare to see such a big gap between the two, but I'm sure the bank Nifty is going to play catch up, and that will then also add further to the gains in Nifty, given that banking stocks have a certain weightage in there. So that's the overall thought process. I think every sector is slowly but surely starting to participate, and that is why the index itself is not really showing any signs of giving up.
Okay, so you're saying higher levels ahead, 25,700 is perhaps in sight. Got it. Rohit, we're going to come back to you in just a minute. And Amit, welcome to the show as well. Just hang on, because we want to start off with discussing what was really the sector of the day, and that's the IT space. I mean, stocks were on fire across the board, all of large cap IT. Now, some of it you could perhaps attribute to positive brokerage commentary, for instance, LTI Mindtree, and then there was L&T Tech. which was gaining after the investor call went down pretty well with the street. So let's straight away first go across to Rima to get in all the fundamental triggers and details, and then we'll put the question to our guests. Rima.
So one of the key takeaways at yesterday's analyst meet for L&T Technology Services was the company reiterating their medium-term aspiration of achieving $2 billion of revenues and margins of 17 to 18%. They're also focusing particularly on three verticals: mobility, sustainability and tech. And their aspiration is that each of these three verticals will achieve a revenue of $1 billion. They've been given a separate P&L responsibility too. As for the near term, the management did indicate that the conversations, the pipeline on demand is improved, but still decision-making is taking time. Motilal Oswal says the company's revamped go-to-market strategy opens up new avenues of growth for the company, particularly in the automotive side, where some of its peers have done better. They have a buy call on the stock. Nuvama, though, thinks that the valuations are a bit expensive and therefore the risk-reward is not favorable. But at the analyst meet, the company reiterates its growth ambitions of $2 billion of revenues and margins of 17-18%.
Rima, stay with us. LTI Mindtree, it was up in today's trading session post the positive brokerage note, while Tata Elxsi was lower post the sell call coming in from Kotak. Take us through both those two.
So LTI Mindtree was the big mover today, and this is after Kotak Institutional Equities upgraded the stock to an ad, raised the target price to 6,200, and this is predicated on growth picking up for the company. FY24 growth rates of 4.4% were a trough, picks up to 6.5% in the current year and accelerates to 11% next year, and this will be driven by a recovery in BFSI and high-tech. These were the two challenged verticals, and now you're already seeing green shoots in spending by the large US banking clients. Also, the other headwind about senior leadership exits, well, that seems to have cooled off a bit in the last 3 to 4 months. But on Tata Elxsi, Kotak Institutional Equities is very bearish. They say that, the stock of Tata Elxsi moved up by 26% in the past 2 days. The stock was expensive to begin with, even before the rally. They have a sell call, target price 5,500, valuations are stretched. And while the automotive vertical for the company is going to do well, that's 50% of the revenue. The balance 50%, which is healthcare, media, communication, is a bit challenged.
Thanks a lot, Rima, for joining in and updating us on those tech names. Amit, let's come across to you. I don't know how you're placed on tech, but what do you like? Large cap, mid cap? You'll normally go for some fancied sectors, where you see value. What's the call this time with regard to tech?
Hi, Nigel. Thank you so much for having me on your show. And Nigel, unfortunately, we don't have any exposure to tech services, so we've missed out on this trade.
All right. No worries, but you'll definitely got in a couple of other names. So share some insights on that. How have you rejig the portfolio? It's going to be a stock-specific market from here on. The index has done very, very well. But how you'll place first between large and mid caps? If you're allocating fresh money, how you're doing it? And what is that, one theme that you can share with us that you'll have got into, say, in the recent past?
So Nigel, the theme that we've got into has been music. We've got one company which is growing at 30-40% in this space. Music is a great business. It's a free cash flow business. If you see even your tech services, even at the worst time when there was recessions, the YOY growth of all these companies was negative. If you see Persistent bottomed out at 32 times, if you see Infosys, it bottomed out at 26 times, TCS bottomed at 28 times. In that range, all these, see, when you have a free cash flow business, it is very tough to keep pulling it down. And we've bought one free cash flow business in the music industry, because we will not buy this 5-10.
So Amit, so that it's doing a free cash flow of around 100 crores operating cash flow, not free. Yeah. So that's Saregama.
No, the other one.
Okay, all right. Yeah, continue. You're making the point.
There are two listed players. There are three large companies. One is T-Series, one is Saregama, one is Tips. These are the three large players in the Indian market. T-Series is unlisted, so of course we can't buy that.
Correct.
But the other two players we don't have. So of course I'm a portfolio manager, and whatever I say, me, my family, my clients have vested interest in virtually everything I speak, and we are very fast traders. We're all the time buying, selling. But coming to this thing, that is the new position that we have created, 30% growth. And it's a great business. You wake up in the morning, you probably listen to bhajans. In the night, if you're happy and drinking, you'll listen to Honey Singh. If you're sad and you listen to breakup songs, if you're happy, you listen to romantic songs. Listen, whatever you listen to, I'm going to make money, hopefully, from your on. We played Saregama initially from like the first phase of Saregama, but we sold out Saregama in 2021. We made a fortune, to be honest, in Saregama when Saregama was scaling, but now we don't have Saregama. We have the other competition, which is scaling at 30-40%.
And Mr. Taurani has been sounding fairly optimistic as well. He raised some money and looks like that's the theme that you're playing out there. But since you mentioned music and some drinks from the alcohol beverage space, what do you like?
So alcohol, we've not been able to get something which we think is scaling well. We had Tilak Nagar in our portfolio. We've sold out. Very small positions we've taken. We've never had the conviction to build extremely large positions because the industry leader, United Spirits, doesn't grow that fast. Radico Khaitan is the only good player, but is not scaling very fast. Sula, we love as a business, but they are not scaling. But we need scale. So example in FMCG, we categorize this as FMCG. We have, assuming Varun Beverages, which is growing at 28%. Now, for me to shift from a 28% grower to someone who's growing slower, there has to be a very large valuation gap, or there has to be something for me to shift, because HUL and all these guys are growing at 3-4%. That is not where we want to go. So we want to be with the highest growth player in every industry. Until the time that guy is growing and the price is also telling me the same things, we will stay there. And we just keep doing this across. Whenever there are large changes, there are large pivots which are happening. When Sting came in, we got into Varun Beverages, and that stock has done wonders for us. Like Indigo, which I think is pivotal. We already have Indigo in our portfolio. I think it's still cheap, and markets are just waiting for a block here.
Amit, you mentioned beverages, and you mentioned Sting and we were talking music. So for a second, I thought it was Sting, the musician who's a personal favorite, but yeah, Sting the drink. I get it. By the way, stay on and listen to this, because you're talking about growth stocks, and I know you have the next one, at least you did. Trent is a stock in focus. Do you still hold the entire holding, or have you booked any profit in Trent, Amit?
No, we have sold at intervals, but it is still our second largest position. So listen into this. We've got Sudarshan joining in, because today Bernstein came out with a note on retailers, and among other stocks, they mentioned Trent, in specific as well. That stock was taking flight, but there were other companies mentioned in that note as well. So Darshan, fill us in on the details.
So talking specifically about Trent, Bernstein has initiated coverage on the stock with an outperform rating, and target is rupees 8,100 per share, which implies upside of 11% from current levels, and this 11% upside is after the stock was 6% higher in today's trade. And the reasons, as per Bernstein, it says investors and companies have been waiting for Indian middle class to emerge and spend, and this wait is a supply at right value problem, not a demand one. And demand beyond top 10% of pyramid and beyond top 40 cities can be unlocked, and Bernstein sees huge value creation opportunity. Talking about the stock performance, it was up 6% today, 140% in 2024, and in August it was up 25%. And this up move also can be attributed to the strong set of earnings that company has been reporting for the last few quarters. And another trigger apart from the performance of the stock is the Nifty inclusion. The stock will be included in Nifty effective September 30th. Another stock that was in focus today was Ami Organics. Stock was up 6% and is 7% away from the record high that stock had hit in the month of June. And the reason was HDFC Securities has come out with a note. It has upgraded the stock to buy and given the target of rupees 1,600 per share. And this target price implies upside of 10% from current levels. And as per HDFC Securities, the reason it has upgraded because of first ramp up in Fermion contract, expansion of its specialty chemicals portfolio, balance sheet turning net cash in Q1 FY25, and increase in better margin CDMO contribution to 25% from 12% in FY24, and last is ramp up in capacity utilization of specialty chemicals plant. And because of all these factors, HDFC Securities expects margin to improve by more than 500 bips by FY26 and profit to grow at a 38% CAGR and EBITDA by 29% CAGR over FY24-26.
Thanks a lot for that, Sudarshan. Bazooka moves on both those two. Rohit, what's your view? Trent has been a big mover. Sometimes when the stock comes into Nifty, you see the juice already come off because there was pre-positioning out there. But on the charts, how's it looking on Trent? And if you like anything from the specialty space, which is looking good on the charts, because there's a fundamental debate whether they're bracing for more or not.
So it's interesting. See, when we look at a stock like Trent, it's been like trending for most of the last couple of years. Now, at this point of time, if I purely look at the chart, would somebody buy it at this level? Typically, I wouldn't, because we like to buy the dips. The only good part is that it's in a trending mode. So that means that whenever it does give you a good pullback, like it did probably in early August, those are times when you actually look at getting in. And we are not really at that point in this move. So for people who are holding, they're probably just riding it. But to make a fresh entry, you really have to wait for those pullbacks.
Chemicals? Yeah, chemicals also. Anything you liked out there?
No, chemicals I have actually is a sector I've sort of avoided because, we do a combination of looking at the momentum along with looking at the, valuation setups. And when we do that combination, we actually found that a lot of these companies, while the price action has been there, they've actually not shown the kind of growth for quite a while. So that's a sector we've sort of avoided completely.
Got that. Rohit, at the start, you made the point that this market has the momentum and the ammunition to perhaps go higher. And you mentioned even 25,700 perhaps is on the cards. I mean, any timelines you want to put to this? And you're saying you are expecting banks to eventually play catch up. But what else? What else will lead this leg of the up move? And what would you look at buying afresh now?
Yeah, so that's interesting. So I think this last goes on for at least another 2-3 weeks. I did say usually we get some trouble from the US election season somewhere in late September, early October. So that time is where we would be looking for the next correction. So possibly we'll achieve most of our targets by second or third week of September. In terms of sectors, I think the interest rate cycle is an important one to pay attention to. So immediately puts our attention towards interest rate sensitives. So which is where the first thing I focus on. Of course, I've spoken of banks, but what I'm finding is a lot of the financial services or NBFCs, for example, that are really having not outperformed for a long time and are really breaking out of ranges. Just to give an example, and it's not a recommendation for anybody because we are not really advisors. But if I just look at Shriram Finance as an example, so it's breaking out of a couple of years of range. And has been growing, and therefore when we look at the valuation setup, we actually see it getting more and more undervalued, even as prices have gone up because of the underlying growth not getting priced in. So those are the this is an example of the type of things we are really searching for, where the argument is against valuations. Now, speaking of interest rate sensitives, so I go on to the metal sector because the direct impact of that is on the commodity cycle, and commodity prices should start picking up from here. We already seen aluminium prices pick up a lot.
Yes.
Copper hasn't done that much, but I think it will. And so immediately we get our attention to, metal stocks from, copper to aluminium to steel.
Yeah.
And that's, I think, another interesting place to be in.
Well, thanks a lot, Amit, as well as Rohit, for joining in, filling us in with your take on the markets. It's that big bull market, right? I mean, defying gravity. But we appreciate you joining in, giving us a view on a lot of stocks. Slip into a short break, come back. We'll continue our focus on what went on during the day. We'll get you some market opinion as well. Welcome back. Well, as always, let's go to Nimesh. He's going to give us a sense on D-Street chatter. Nimesh, take it away.
Well, the Nifty ended in the green, largely on back of support from technology stocks and select pharma names, but it was a mid-cap which relatively underperformed, and the advance decline was close to 1:1. A lot of individual names are buzzing. The first stock in my list today is GSPL. Big move in the last couple of days, large volumes as well. And the city is anticipating a corporate development very soon. A potential collapse of the holding structure could be on the cards for GSPL. The second stock is Allied Blenders, a recent listing, but off late it's seen a bit of up move as well. Again, there are very strong buy flows, and I understand a leading long-only FII, is an active buyer in allied blenders of late. The third stock is LKB Finance, a small stock, but again buzzing in the last couple of weeks, and the city is anticipating a corporate development in LKB Finance as well. The fourth stock is MedPlus Healthcare. We saw a large block a couple of days back where Warburg sold out its entire 11.5% stake. Now I understand another large holder is going to sell the entire stake and could be a potential clean out again in MedPlus for healthcare. And the last name is Prestige Estates. Well, the stock has been buzzing off late. I understand the company is likely to raise funds via QIP very soon, and the QIP is likely to get launched later this week.
Okay, all right. Thank you very much, Nimesh, for all the buzz and the chatter from the dealing rooms. And with that, we're out of time. But just before we go, two important events to watch out for that will define market direction tomorrow. One, of course, NVIDIA earnings that will come out later this evening after US market hours, actually. And we'll watch out for the sort of the commentary. And the other is the Reliance AGM. Those are some of the big cues to track tomorrow. But before we go, Nigel, also, I think, as after the markets closed out, there was a bit of an advisory of sorts coming out from the regulator today on the SME IPO.
Well, that's right. And Sudarshan is joining in to fill us in with a quick update on that front. Sudarshan.
So some very strong words coming from SEBI in terms of advisory for SME companies and for the investors who have been investing in these companies. But before I talk about that advisory, look at the performance of BSE SME Index. It's up 150% in 2024 and it's up more than 200% in last 1 year. Now talking about what does SEBI say? It says some of the SME companies and or their promoters have been resorting to certain means that project an unrealistic picture of their operations, and such companies or promoters have been seen to make public announcements that create a positive picture of their operations, and these announcements are typically followed up with various corporate actions such as bonus issues, stock splits and preferential allotments. And because of all these things, SEBI has come out with an advisory for the investors. It says investors are advised not to invest based on tips. It has urged investors to be careful and watchful of these SME companies and their announcements, because it believes some SME companies projecting unrealistic picture of their operations, and modus operandi of some companies follows a pattern, and SEBI has mentioned all this in the release that today it has announced.
Okay, so one needs to be watchful and careful. That's the message from the regulator. Sudarshan, thanks very much for the details. With that, it's a wrap on this edition of Bulls Charge Ahead. Thanks for watching. More news and updates coming up in just a bit.